Buddy, shares of Nvidia starting the year strong, up 20% so far this year after its massive run last year. It's more than tripled in value in 2023, by the way. Maybe that's why CEO Jensen Huang was dancing on his recent trip to China. It was his first trip to the country in 4 years as chipmakers try to navigate U.S.-China tech tensions. He reportedly met with Nvidia staffers in several offices. Unclear if he also met with government officials, but he's a good dancer nonetheless. And while Washington is expected to tighten its grip on U.S. exports of advanced chip to China, our next guest is bullish on the sector, expecting increased spending in generative AI to fuel another rally. Nvidia, one of his top picks, as is Intel, which will report fourth quarter earnings later this week. Let's bring in Srini Pajjuri. He is a senior semiconductor analyst at Raymond James. Srini, welcome. Good to have you with us. So you think that the AI-led rise in a lot of chip stocks has legs, is going to endure this year. How much growth is it going to deliver?
Yeah, thanks, Tyler. First of all, if you look at the semi cycle, I think we started this rally sometime in October of 22. And so far, the rally has continued very strongly, has outperformed the S&P. The SOX index has outperformed the S&P by about 45 points. If you put that into context, typical semi cycles last, roughly about 2 years. And you get about anywhere from 30 to 50% outperformance versus S&P. This time, we're in the 15th month of the rally, and so far, the sector has delivered about 45% outperformance. Normal times, we would say we're probably in the 6th or 7th innings of the rally. But because of AI, we are still continuing to recommend the stocks in the sector. And our view is that AI roughly accounted for about 9% of the industry revenue last year. And we expect it to grow about 100% this year. Actually, last year it grew about 200%. This year, AI revenue will grow about 100%. And over the next 2 years, we do expect AI to account for about, 7-8% of the industry growth. And this is an industry that actually grows in mid-single digits. So AI itself is, helping drive that, high single-digit type of growth. So overall, we expect the semi industry to grow at a double-digit pace because of AI for the next 2 years.
So that is an encouraging outlook for the companies that are exposed to AI, and there are a lot of them. We'll get to them in just a moment. But am I understanding correctly that you think that there is an even longer-term play that will give the AI sector, as it matures, even greater growth deeper into this decade and the next decade?
Yeah, again, this is something new that we haven't had this kind of a catalyst in a long time. Maybe you can go back to the, the late 90s in terms of the internet build-outs. But as I said, right now, the most of the benefits of AI are going to Nvidia, as you mentioned. We expect that to broaden out over the next few years. We're starting to see companies like Broadcom and AMD this year. And then memory, for example, Micron will be a play on this going forward. And even some of the network connectivity chips, companies like Marvell and Broadcom are going to benefit from. So we see any supplier that supplies into data center to benefit from AI. And then on top of that, there's a lot of talk about on-device AI, edge AI. People are talking about AI PCs, AI smartphones. It's very, very early days. I think it's difficult to put a number or magnitude or the duration on this catalyst, but we think it's going to be big.
So as you look at, people can't get enough of Nvidia, and I saw you have a $700 price target on that stock.
Right.
Wow. They're just going to own it?
Yeah, I mean, look. Look, valuation-wise, it's not that expensive. Even though the stock has had a massive run, the estimates have gone up even more. So, this is a stock that used to trade at 40 times on forward estimates. Right now, it's about 30 times. I think there is some concern that things could slow down a bit. We don't see that in the short term. Longer term, there's always that, risk that, things could take a pause for a quarter or two. We won't be too worried about it because, it's such a long-term massive trend that if there's a pause in the next 1 or 2, quarters, we would actually view that as an opportunity. So at 700, we're still talking about 35 times forward numbers.
I mean, it's really gone. I mean, now it's really $600 a share. It's gone up $100 a share easily in the last, I guess, 3 months, something like that. Let's talk a little bit about a company that has been among the unloved in recent years, and that would be Intel. You have an outperform on them. I don't know whether that's a tepid endorsement or a relatively, it's a pretty enthusiastic endorsement.
Yes, I think we've been positive on Intel since last year. Stock did quite well last year, and you're right. It's an out of consensus call. It doesn't get much love. But our view on Intel is that as long as they execute on their roadmap, which they seem to be doing, the stock continues to work.